Hello and welcome. If you're an employee here in the UK and you're thinking about getting a new car, you're going to want to listen to this because there is a massive tax secret hiding in plain sight, especially for electric car drivers. And today, we're going to pull back the curtain and show you exactly what it is.
So let me just start with a big question. How on earth can you drive a 50,000-pound premium electric car, something like a top-spec Tesla or a Polestar, for as little as 100 pounds a month in tax? Now, I know what you're thinking. That sounds way too good to be true, right? But I promise you, it's not. This is a 100% legal, government-endorsed advantage that most people just don't know about. And just so you know, we're getting all of this absolutely right. This entire breakdown has been developed in partnership with the tax experts over at My Tax Accountant. These guys are the real deal. They live and breathe this stuff day in, day out. So you can be confident that all the information we're covering is completely up to date and spot on for the 2025/26 tax year.
Right, so here's what we've got on the agenda. First, we'll talk about the new reality of EV taxes. Then, we'll get to the good bit, revealing the real tax loophole. After that, I'll explain exactly how you can use a clever thing called salary sacrifice to get these savings. We'll also see why your boss is going to love this idea, what the future looks like for these tax breaks, and, most importantly, what you need to do next. Let's get straight into it.
Okay, first section, driving down your tax. Let's just clear the air about what's actually been going on with electric car taxes, because there's been a lot of noise about it in the news.
So, the big headline that everyone saw was this. From the 1st of April 2025, the £0 road tax, or Vehicle Excise Duty (VED) as it's officially known, for electric cars is gone. It's over. And look, a lot of people heard this and thought, well, there goes the big financial perk of having an EV. But honestly, that's not the whole story, not even close.
So, what does this new road tax actually look like? Well, it all depends on when the car was first registered. If you've got an EV registered between April 2017 and March 2025, you're now looking at the standard rate, which is £195 a year. If you get a brand new EV, you get a little break in the first year, just £10, before it jumps up to that standard rate. So yes, it's an extra cost, for sure, but it's not the game changer everyone thinks it is.
And there's a little sting in the tail. If your EV had a list price of over £40,000 when it was new, you'll also get hit with this, an extra £425 a year. This is the expensive car supplement, and you have to pay it for 5 years. So, when you add it all up, a lot of premium EV drivers are looking at over £600 a year in road tax. But you know what? All of this, it's just a distraction. It's not where the real action is.
So let's forget about road tax for a minute, because it's honestly small potatoes compared to this next part. It's time to reveal the real loophole, why company car tax is the secret weapon for savvy drivers.
So here it is, the single most important point of this whole thing. The tax that truly matters, the one that can save you literally thousands of pounds every single year, is not road tax. It's company car tax, which is officially called Benefit in Kind tax, or BIK for short. This is the one you need to focus on.
So what on earth is benefit in kind tax? Don't worry, it sounds more complicated than it is. It's basically just a tax you pay on any perks you get from your job that aren't part of your cash salary. A company car is the classic example. HMRC looks at the car, gives it a taxable value based on a percentage, and you just pay your normal income tax rate on that value. That's it.
And this slide. This slide shows you the secret in black and white. For the 2025 to 26 tax year, the BIK rate for a pure electric car is just 3%. 3! Now, compare that to a typical petrol or diesel car, which can be anywhere from 25 to a whopping 37%. This isn't just a small gap, it's an absolutely massive Grand Canyon-sized difference. Now stay with me here, because when you see these percentages turned into actual pounds and pence on the next slide, it's genuinely shocking.
Okay, let's make this real. Let's take that £50,000 car we mentioned, and let's say you're a 40% taxpayer. With the electric car, its BIK rate is 3%, so the taxable benefit for the whole year is just £1,500. Your tax on that? Around £50 a month. 50! Now, look at a similar petrol car. Let's say it has a 30% BIK rate. The taxable benefit shoots up to £15,000. Your tax bill on that car is £500 every single month. I mean, the difference is just staggering.
Let's just pause on that. In that one example, the difference is £450.
every single month. That works out to over £5,000 a year, money that goes straight back into your pocket. It's not a trick, it's not a loophole in a shady sense, it's just the government's way of incentivizing electric cars through the company car system.
So, right now, you're probably asking, okay, that's incredible, but how do I get in on this? I don't have a traditional car. Well, the answer is a brilliant, simple mechanism called salary sacrifice. This is the key that unlocks that tiny 3% BIK rate for pretty much any employee in the UK. So how does it work? It's really straightforward. First, your employer partners with a leasing company to get you a new EV. Then you agree to give up or sacrifice a portion of your salary each month to cover the lease cost. And here's the absolute magic of it. That payment is taken from your salary before any tax and national insurance is calculated. Because your gross salary is now lower on paper, your income tax and NI bills are lower too. The only tax you pay on the car is that tiny 3% BIK tax we just talked about. It's an absolutely incredible deal.
And as if that wasn't already good enough, I've got a quick pro tip for you that makes this whole thing even sweeter.
Did you know this? If your employer has chargers at your workplace and lets you plug in for free, that electricity is a completely 100% tax-free benefit. HMRC does not see electricity as a fuel in the same way it sees petrol or diesel. That means there's no nasty fuel benefit charge, which can cost thousands a year for traditional company cars. It's another brilliant hidden saving.
Now, I get what you might be thinking. This sounds amazing for me, but it sounds like a lot of hassle for my boss. Why would they ever agree to do this? Well, you're going to love this next part, because this is what makes it a genuine win-win for everyone involved. Here's the kicker for your employer. For every single pound of salary that you sacrifice, they save 13.8% in their employer's national insurance contributions. For a typical EV lease, that saving alone is often enough to cover all the admin costs of setting up the scheme, which means it can be cost-neutral or even profitable for them. And beyond the money, it's an incredible perk to attract new talent and keep existing staff happy. Plus, it looks great for their environmental goals. It's an absolute no-brainer when you lay it all out for them.
Okay, but I do need to give you a heads up. This golden window of opportunity, as amazing as it is right now, isn't going to stay this wide open forever. The government has already set out its plans for the future. As you can see here, the BIK rate is scheduled to rise, but don't panic, it's happening very, very gradually. It goes from the current 3% up to 5% by 2027, and then up to 9% towards the end of the decade. Now, let's be clear, even 9% is still incredibly low compared to a petrol car. But the message from the government is obvious. The biggest, most significant savings are there for the taking right now. The sooner you act, the longer you'll lock in these ultra-low rates for your entire lease period.
Which brings us to our final and maybe most important section. What are your next steps? How can you actually take action and make this happen today? So, let's just quickly recap the absolute key takeaways. Number 1. Forget the noise about road tax. The real saving is the super low 3% benefit in kind rate. Number 2, the best way to get this saving is through a salary sacrifice scheme. Number 3, this is a genuine win-win. Both you and your employer save money. And finally, number 4, this golden window of low tax is starting to narrow, so the time to act really is now.
So the best first step you can take is to have a chat with your HR or finance department. Ask them about setting up an EV salary sacrifice scheme. And for expert, personalized advice on how this could work for you or your business, you really should speak directly to the professionals. You can get in touch with my tax accountant on 0208-570-8531, or you can drop them an email at info@mytaxaccountant.co.uk. Now, just a quick final note, please remember that the information we've covered today is for general purposes only. It's a fantastic starting point, but you should never rely on it exclusively to make big financial decisions. Always consult with a qualified expert first. Thanks so much for joining me.